Hey, welcome to podcast number 3. My name is Peter Brecht. I'm here with our president, Mike Tanghe. Mike, how are you doing today?
Peter, thank you. I'm doing wonderful. Great start to the week here on a Monday morning.
Yeah. So everyone that's listening to this, you'll be getting this on Wednesday or whenever you're listening to this in the future. It could be years from now if this is still posted up on YouTube and you have the ambition to go back and listen to these. Anyways, Mike, so we had a couple of things listed for our conversation today. A couple that were like insurance related, but we may push those off because the real conversation that I wanted to kind of have was actually goes back to a conversation I had with my wife on, gosh, was this like Saturday morning? I think it was really early. Kids were still asleep, having coffee, and my brain is always thinking Falcon West insurance, oil and gas, all this stuff all the time. And my wife has just gotten used to it. And so
Poor
I was,
Rachel. Poor Rachel.
yeah, I feel bad for her, but she married me, so she's figured me out over time. But anyways, I was sitting there at our kitchen table and I was just like writing the initials FW down like a psychopath over and over again in like different fonts and stuff. And she's like, "What are you doing?" And I'm like, "Well, I'm trying to think of a podcast name." And then truly, like, this is kind of like where my brain goes with branding and marketing and stuff like that, is these initials. But long story short, she's like, "Well, like FW, like," and I said, "Well, I got to tell you the story of like the background of Falcon West." And so I kind of told her my version of it, but I thought it would be appropriate, being early in the days of this podcast, to maybe tell everyone where the name Falcon West even came from. So I'm going to hand it off to you. I'm going to let you document this on camera.
Sounds good. All right. So a little history lesson for our listeners. So 1981 was when our company was started. And there were two gentlemen, William Fiss and Lynn Whaley. And they formed the company that was called Fiss Whaley Inc. That's what our company was originally incorporated as. Fast forward 12 years, 1993, there was a producer, Kurt Volk, who bought out Lynn Whaley's shares when Lynn decided to retire. And so fortunately, Whaley Volk, for those strong German spellers, that's Uoelck, both start with the letter W. So they thought they'd kind of solved the problem there. But after a few weeks of kind of throwing around the name, kind of like what we've been doing with our podcast, they decided that Fiss Volk didn't really roll off the tongue and they thought it'd be too hard to spell for people. So Bill and Kurt said, let's come up with a new name. However, their creativity in naming was limited, or ran kind of head on into their frugalness, because what they had just done was bought a large amount of letterhead. With prominently displayed on the top was the initials F and W. Our listeners who don't remember 30 years ago what went into the letterhead process, it was very expensive. You first had to hire a graphic designer, then you had to find a printer, and then you had to print in enough volume where it made sense for the printer to set the type and all those types of things. So again, I know I'm sounding quite old, but that was the reality. Was they had a lot of expensive letterhead sitting in their storage room, and it said FW up at the. So they decided they couldn't get rid of FW. They had to think of a new name that was easier to pronounce, and they came up with Falcon West Insurance is the name.
Yeah, that's just I didn't even think of the cost associated with the letterhead, but because like I think of it and I'm like, I would have just come up with, but we print on demand now. Back then they had to have it all ready to go. Where was the company even located in the West? Like we have an office on the West Coast, so it makes sense in theory, but where was the company located? Do you know?
Yep, Mission Valley. We had the
same
office
place
for almost 30 years
Okay.
on Camino del Rio South until we moved away a couple of years ago.
Okay.
One other kind of story that slowly is connected to it. So when I started in 2012, our domain name was Falcon West Ins, short for insurance, falconwestins.com. But after a couple years of explaining to prospects, spending the time trying to spell it out, and it's Falcon West INS, and people ask, is there a hyphen? What does INS stand for? Just kind of that there back, and multiply that by the number of conversations you had in a day. We actually tracked down the owner of the falconwest.com domain, and again, nothing related to insurance. It was from a bar that had been closed for a number of years called Falcon's West Nest in lovely Bullhead City, Arizona.
Right on.
And so we were able to track down the owner of that domain, a lovely woman. She worked evenings, so we had to time our calls early in the morning, right when she got off of work. But she agreed to sell us the domain name. for Falcon West. That was in 2019. If you multiply the time we've saved in each of those incremental conversations or emails going to the wrong one, was probably one of the better investments that we made.
It's funny. Like, I had this conversation with someone on LinkedIn. It's actually one of the guys out in Oklahoma that we were on his podcast. Wade and I were there out 6 months ago, but he's like, yeah, I own like 180 domains. And I'm like, that's just too many. But it's funny how domains are important, and truly, like, they are kind of the front of it. And I remember like looking at Falcon West website when I started, and like, I thought it was great that you had the exact domain. I thought that was great. So definitely a selling point there. So, well, that kind of brings me to our next thing, which is, the name of our podcast. And so we've had a lot of great ideas and suggestions from our team, a lot of thoughts. I'm just kind of excited and like anticipating here, but I'm going to let you unveil the name of our podcast, and then we'll talk about why we chose this name and kind of the direction of where this is going to go.
All right. So without any further ado or drum roll, our podcast we decided on was going to be called Falcon Forward. And there's a couple of reasons for that name. For those who are familiar with our company and familiar with myself, have a strong allegiance to the game of rugby. So I found rugby in college, played for a number of years after college. Several of our colleagues are former rugby teammates of mine. The academy program that we've been running is closely intertwined. We've sponsored a number of rugby teams all over the U.S., so very, very tied in with rugby. And in rugby, there's 15 players on the field, but you're divided into forwards and backs. And backs would be considered the more athletic or the more finesse and smaller players, whereas forward would be the larger, more brute strength. And, if you ask a forward, forwards are the most important. If you ask a back, the backs are the most important on it. But since we get to name the podcast, we're going to be Falcon Forward, representing our rugby roots and paying homage to the forward pack on a rugby pitch.
Love it.
The second tie into it, obviously, would be the direction, and that we're a company that is going to continue to grow. We have great team members. We have great energy within our company. And we have prospects and clients that appreciate the work that we're doing, and it leads our company forward.
Yeah. Not to mention, Forward has the F and the W. So it kind of ties in our initials that goes back to the letterhead, back all the way to 1981. All good things there.
Absolutely.
A lot of heritage there. All right. So now that we have our name established, we can kind of dig into some of the other fun stories for the week. So this came up actually for me last week with a client. We were going through getting them auto insurance, and there was something came up on an MVR that an accident came up on their record, which actually wasn't theirs. And I've gone through this before with family members and actually a couple other clients too, where something had been incorrectly reported. And a lot of times I'm familiar with this just because, looking at MVRs and, vehicle records that through the dealership level. But a lot of times like dealerships will misreport like odometers, right? And so it's just crazy. Like you can add an extra one at the end, right? And it just becomes a whole different thing, and it's a problem at auctions, and the list goes on and on. But so what I've learned is that these clue reports get traced back to LexisNexis. And this is basically a huge data warehouse of everywhere that we've ever gone, moved, lived, vehicles that it's just crazy the amount of information they have. Credit reports get run off of it. The government uses it for, terrorist threat markings, things like that, when they're using it for individuals, all this crazy stuff. So what you can do though, as a consumer, and this is what I've done for myself and my wife, and I walk my parents through it even, is you can order a copy of that report, and then you can actually go through and redact a lot of that personal information. So like if you go try to look up people that have done this, you won't be able to find much of them online unless they have just personally put it out there on like a social media platform. So, and what you do here for like an MVR is you go to the carrier and say, look, there's an accident showing on my report, shouldn't be there. You get a letter from the carrier showing that it was either not a fault or that it doesn't even exist. And then you could send that to LexisNexis and they get it scrubbed off. So just something I would mention if you, for personal use or with clients, but that's a great thing to look into. And I'll put a link in the show notes if you want to take a look. But I thought that was helpful. So I don't know if you have any other context there, but just want to kind of share that.
I think that's a great idea. Having that how-to in the notes would be fantastic, because it is something you really have to be proactive on safeguarding. to make sure it doesn't fall into the wrong use, and then making sure things are accurate. And so if anyone's ever run their credit report, it would be a very similar piece to that, but one I would say that is not as well publicized, and definitely something that people should be proactive on addressing.
100%. Yeah. And it's not hard to do. You get one free report every year. They mail it to you or email it to you, however you want to get it. It's pretty cool. The other thing that I thought was interesting. So, I get a lot of rugby stuff on my social media feeds, but I didn't know this, but Henry Cavill, so he's a famous Hollywood actor. I think he played Superman, but he was a rugby player. So there's actually a video, and I'll link to that in the show notes too. But he was a rugby player, and then eventually ended up in Hollywood. Just more rugby people kind of all over my TV screen these days, which is crazy.
All good things are traced back to rugby.
It seems to be the case. All right. The last thing is that there was an article in an insurance journal that plaintiff cases in 2025 hit a record $79 billion in settlements. I'm just constantly amazed at like that we're setting new records in that. I think the last biggest year was 2022, up, down 23, 24, and then 25, we roared straight back up to 79 billion. So I wanted to get your thoughts on that. I mean, you've been in this industry for a long time and kind of seen this, but I mean, it goes back to D&O and all these other things that kind of get connected to it. What are your thoughts on this record-breaking year?
Yeah, litigation is, I mean, to me, just an out of control phenomenon specifically to the US. If you look at other countries, they don't have that. And you could look at some things like in other countries, if you bring a case and lose, then you're on the hook for all costs related to that. And, what does that have the effect of doing? People don't bring cases unless they've truly been harmed. In our system, you got nothing to lose. So might as well throw something out there and see what sticks. Yeah. There's something also too that's not super well known by the general public, but it's called litigation funding. And this was private equity people recognizing that, hey, if we fund a whole bunch of lawsuits, we know that some will get thrown out. We know that some will go to jury, which are the home runs found for the plaintiff. But a lot of them will just settle. And they recognize that if they can almost flood the legal system, more will settle. It became this kind of almost perverse incentive to fund more and more because the payout was greater and greater. And so what that did was, again, claims that in the past wouldn't have been brought because they were just so frivolous and no attorney wanted to take them on retainer and risk wasting their time. Now those same attorneys are getting told, hey, take every case that comes your way and we'll pay you for it. So again, what's their incentive? Their incentive is to take those. And then the people funding this are saying, hey, we're getting this great return on our money. But when your system's not designed for that, when the system is designed to, hey, if someone is actually hurt or property is damaged and the other party doesn't step up and pay as they should, then our legal system is designed to correct that. It's not designed to take every single lawsuit or every single grievance to trial. And so again, what's the effect of all that? It floods the system. And this isn't a victimless issue because people, and we hear this, that people say, oh, that's insurance will pay for. Well, insurance is just merely spreading that cost of one amongst many. In these instances, what does that do? It drives up insurance rates for all. Big issues with it. Unfortunately, people have a lottery mentality that if something really bad happens to me, it's never an accident. There needs to be someone else at fault for that. And typically it's, a game of musical chairs where you look around and who's got the deepest pockets. Well, all of a sudden that person is going to have the target on them. And that's why we see these, $79 billion in settlements. So
Crazy.
Again, insurance companies are scared. They obviously look at these numbers and they don't want things to go to trial because they know that if something does go to trial, then all bets are off. So, what can you do? So what can a person do to try and limit their potential exposure? It's what the majority of our clients do, which is just do things the right way. Make sure things are well documented. Make sure you have good processes and procedures. Make sure you train well. If you do things the right way, then you're going to be at a much lower risk of these things happening. And then you'll also have a defense if an accident, and obviously accidents happen. That's reality. And if you've done things the right way, you have good documentation. And also if you have good insurance, because if you think about a scenario where a terrible accident happened and there's been a serious injury, a company that has too low of limits of insurance versus a company that is well insured, what's going to happen in that scenario is the insurance company is going to look at it and be like, wow, this is really bad. And it's going to be really bad. If they're only on the hook for a certain amount of money, then they're not going to fight that. They're just going to turn over a bit of money. They're going to make that financial decision. Versus in that same scenario, if you have an insurance company with a lot of money at risk, they're going to spend an equal amount of trying to keep that away from a jury in defense.
It seems too like a lot of these attorneys that are going after, are starting these lawsuits in general. The first thing they're asking for is a copy of the insurance policy. Like it's almost like an intentional setup. Like that's kind of what they're targeting, right? Which is interesting.
Yeah.
Anyways, maybe that's not always the case, but it seems to be, at
Yeah,
least from
in
my
different
experience.
different venues, you're limited by that. At the end of, because I've heard that from clients before saying, well, I don't want to have too high limits because if something happens, that's just what they're going to go for. My argument or counter to that would be
Yeah,
you don't want to be too low because, you know, at the end of the day, someone has to prove what their damages were. So even
sure.
if a jury awards some crazy amount, there's a means to appeal that. And at the end of the day, they're going to have to justify what was that financial loss.
Yeah,
And if you have a company with significant assets or you built it up over time and it's got, this is a company that's nice and produces a nice income stream, or you have personal assets, at the end of the day, that's all at risk if you don't have enough insurance. So, but yeah, you definitely bring up a good point or something that is often talked about is, well, I don't want to have too much insurance because I'm going to become a target. I would argue, oh, you don't want to have too. What's going to make you a target is if you have success, meaning you have assets either personally or your business is a successful business. That's what's going to make you a target. And insurance is just a means to transfer that target over to an insurance company for reimbursement.
this brings up a really interesting thing that I learned over on the other podcast, the Local Energy podcast. So back in 2008, before 2008, I should say, when the shale boom hit and all this stuff was going on, vendors would come in to the oil field sites where they were drilling and they would give out stickers, right? So everyone would have like stickers from this brand and that brand, and they would put them all on the cooler, right? So they have their cooler of water with the ice on it and all these stickers would be on it. Well, if there was an accident on the drilling site, the attorneys would come in and they would grab that cooler as evidence and they would throw it on their truck and they would drive away. And sure enough, every company that had a sticker on that cooler would be served papers as part of the lawsuit. And so very quickly what happened was people stopped passing out stickers because they didn't want to be part of these lawsuits. And so it's just kind of an interesting thing where like, I'm looking at the oil and gas space, but even then, I mean, it's very intriguing to see how all these things unfold. And our job as brokers, right, or as an insurance brokerage, right, is to make sure that we're placing proper coverage and making sure that our clients are protected. So anyways, just an interesting piece about water coolers there that I never thought would have been the case. So anyways, learn more every day about this industry. It's kind of intriguing.
Absolutely.
So
Yeah. It never ceases to amaze or get changed. And again, one of the many things that I enjoy about it is that you're always learning, you're always able to help clients.
well, Mike, thank you for spending part of your Monday morning with us and hanging out. So we'll be back recording again next week, hopefully diving into some more, I don't know, maybe insurance related topics or some headline news. I don't know yet. We're still trying to figure out where this is going, but exciting and enjoying the conversation. As
Likewise, Peter, really appreciate your time. And I look forward to our next conversation on all things insurance.
all right, Falcon West, thank you. Bye.